S&P 500 on a daily chart. The US jobs data last night was positive and holding the markets in place. We do have the 4th of July holidays in the US tonight, so we should see quiet markets around the globe. I was hoping to have the internal wave structure for the direction on the US markets resolved in this session. That's not the case, so testing our patience, and we have to wait until Friday for that now. So, as you know, we're looking at this as a possible wave 4 with a move higher, but we also understand that this wave 4 is a little bit small here and that this can fail from this point and move down one more leg through here. So just going over that a little bit on the, it looks reasonably positive here so far on the 1600 here for the S&P 500, and the move down through here does count quite nicely, as you can see here, as an ABC correction, a little bit like this larger ABC correction here, just a smaller version of it there. But the move up through here can be counted as the top of wave 3, or it can be counted as the top of C wave here, and then that would leave us, if it was a C wave, that would be down for 1 here, back for 2, then down for 1 here, back for 2 here, and then looking for the third wave to move down. If it's the third wave here, then we'll be viewing this as a wave 4 here, as such here on this smaller 1 hour chart here, and then we would see further upside from this here, and while it's above the 1600, I'll count it like that. Of course, if it takes out these highs here or finds support on the 1620, then that would be resolved and would be pushing up through there, which would probably leave our markets, the ASX and the FTSE working together, would see the FTSE sort of retest high towards the 6500, the medium level, and of course the cash market, the XJO, back up. If it finds support on the 4800, well, then we'll be looking at the 5000 as a retest there. But yeah, well, let's have a look at that. So look, there's not a lot that I can say or do here. Back on the 15-minute chart for the S&P 500, that little ABC that we're looking at, the A, B, and C here, can also be counted down for wave 1 here, back for wave 2, and then there is 5 waves. This is the 1, the 2, the 3, the 4, and the 5 here for wave 1, pulling back up 61% here for the wave 2, and it may have another little push here, but then can roll over from that point. That's what we don't know. Finding support on here. This is a little bit tricky to count here, but on the cash market, it counts quite nicely in both ways as an ABC correction to the upside, or waves 1, 2, and 3 to the upside. So it's a slightly sort of unresolved situation still, and it's not going to complete until Friday now. So bit of a drag. Look, the Dow Jones is exactly the same, but it's vibrating across the 15,000, the medium level, and we can see here that we're looking. This is the 8-hour chart here. If we just take a quick squizzy in here, you can see that we've got the same type of corrective pattern through here. If this moves up on the cash and takes that high out there, then we know that we've got a positive market, and we can look at this as an A, B, C, and we'll be moving further up. But in moving further up as well, it's a process like everything. So we would be looking for, just get this pencil thing out, would be, if it did move up, would be looking for 5 waves up here as such, then an A, B, and C, something like this, maybe, something like that, and then we'd be looking for further upside from this point. But the thing is that once we do get a clear 5-wave structure up here and taking that little high out there, then we can start building in long trades. And when we're looking at, let's have a look at the FTSE first. That's the DAX. This is the FTSE here. So the FTSE is just an 8-hour chart here. We do have a nice clean 5-wave structure to the downside here. So we would be looking at an A and a B and a C wave back up into the 50-60% area, into the 6,500 here, which is the medium level through here. So it does have a bit of a, it does have meaning. So obviously this first block in here would be the first supply, and that's come in now in this first little 5 waves up here, and we've been looking for an ABC correction. So the FTSE here accounts reasonably well here for 5 waves up, a bit rough and ready. This is pulled back it does actually have an ABC correction in there, so that may be the low from this point and move up. It is quite simple and small compared to the larger structure here in terms of proportion and ratios, but if I look on this 15-minute chart here, first of all, from this point here, I can see 1, 2, 3, 4, and 5 here. So that whole 5-wave structure would be either wave 3 or the C wave. So from this high here would be the A wave, the A, B, and C for the B wave, and the C wave here. So it has pulled back enough. It does have the right count in it, so it can move up further. So if you can pull this apart here and look at this on a 5-minute chart here and work out if we've got 5 waves up through here. This is probably the 1, the 2, the 3, the 4, and the 5. Then there'll be an A, B, C, and then further upside from that point there. The Australian market's kind of the same as well, really. You know, we're looking at this move coming down through here as 5 waves down to here, and we're looking for an A and a B and a C wave back up to here as a retest, because if we get 5 waves down through here, then well, it's this situation coming down through here. If we get 5 waves coming down like this in a different direction, which we've got, well, then we look at a counter trend in 3 waves here, of course, and then we'll be looking at another 5 waves down through here as such as well. So at the moment we're just in here, so to speak, and that would be that situation there. So I was looking at this yesterday. If we'd found support on the 4800, well, then we'd be, you know, moving up into that leg there, but that's not the case. So from B wave to C wave here, we're looking for 5 waves, and currently we only have 3 waves down in this. So if we look at that on an intraday level, just bear with me here. Okay, this will do. So we're looking for that 5th wave there. So basically we've got this A wave down here, then we've got the B wave in 3 waves here, and we're looking for a C wave down here, but it's not really finished unless we've got a truncated 5th wave here, in terms of, well, that's quite simple there as wave 1, isn't it? So that would be such as wave 1 there, that would be wave 2 there, and then this looks like wave 1, 2, 3, 4, and looking for 5 here, but this is pulled back up through here. But as long as it doesn't go, you know, into this price territory of wave 1 here, then the wave 4 is fine. So we still may get this down here, and there is a gap on the cash market at I did write it down. I think it was 46.65 or something down through here. So just need to be a little bit mindful of that. Now, if this doesn't occur here, then we need to look at this as a truncated 5th wave in here, and we need to start counting this as 5 waves up through here. This number here, the 4772, is you know, it carries weight, so that as support would be your leg to the upside from that point there. So tested support would be, you know, a move up, coming back and, you know, testing it and, you know, then moving up from that point. You know, so you need some sort of retest, and if you can read the volume, well, then terrific. That would support the price action. Let's have a look at commodities. Not a lot happening there. Everything's pretty much on track with gold and copper. So let's have a look at that. Actually, while those charts are loading, because I use a different template there, let's have a look at CBA, which is this chart here, and Commonwealth Bank as well. Now, BHP rather. So what we're looking for here is we're looking at this being a 5-wave structure to the downside, and after 5 waves we look for a 3-wave counter trend, and that could be in place as such. This leg up here, as I mentioned before, we're looking for 5 waves in this leg here as such, and that's 1, 2, this is possibly 3, this is possibly 4, but that really needs to stay in place there. So we're saying that, you know, this market needs to stay above the 67 here to stay in play, to get that little this little fifth wave here, which will also on an intraday basis have little 5 waves up through to here, and that would make that as an A and a B and a C wave up to that point. So then we would look to short that at that point there. But I'm also sort of mindful of not missing anything as well. So what we do have here is that we do have a little switch set up here, because we've had the market move down, we've had the market move back up and take out the previous high here. So we could have put a short trade under here. So we may put a short trade under here as well, to see how we go with that. Now, it may get triggered, it may not get triggered. We may get a small loss on that situation, but if if it does move down swiftly, then we're on that. So we need to sort of start searching for these trades. I'd started the other day a little bit with Westpac, but yeah, we need to sort of. We kind of got to make the move into there, but it may not be the right timing for it. So it's it is risk as such. The BHP situation is got overlapping wave structures at this current low now. So we're looking at this situation here. So we've got this move up through here, which could have developed into a larger wave to the upside, but it's starting to appear quite corrective now, because it's just got that strong move down through here after this move up through here. Hasn't quite. It would have been better if it took that low out there, and that would have sort of confirmed that. But it does appear that this is a corrective pattern through here, so we would see further downside in due course here. So with that in mind, back into the base metals or the commodities, and okay, so we've got oil here. There's problems with Egypt, so it could be one of the reasons spiking the price. But it also shows us too that it is a very bullish market, and we need to adjust our wave count somewhat. So that's what we've done here. And in this count here, we're counting this little 5 waves up through here as wave 1 and back for wave 2. And then because we've got that strong wave there, we need to label the next degree smaller, 5 waves for wave 1, back for wave 2. And then this would be wave 1, wave 2 here, wave 3, wave 4, and then wave 5 up here for wave 3, back for wave 4, up for wave 5 of 3. And once we've got 3 in place, then wave 4, we'll pull back to the wave 4 of 1 lesser degree, and then we'll move up here for 105 sort of area for that particular top there. But so we're going to see a lot of waves 4s and 5s in here, so a lot of overlapping wave structures, and a sort of a topping process, if you will, a little bit like this little section in here as such. But now that we've done this here, we've also labelled this move up from here as wave 1 and back for wave 2 here, and this would all be wave 3 up through here. So then there'll be a wave 4 once this is finished, and then a wave 5 up. So a much stronger wave to the upside. And as I mentioned yesterday, we're looking at Brent as well coming off through here. So a move through here would have to look at this being either an A and a B and a C wave up here, or up for 1 and an A, B, C, back for 2 here, and then a stronger move to the upside there. Just on this here again here, just on the internal structure here, you've got two things you need to realize is that you need to sort of do your best to follow the wave count, and also work with group 1 as well. Support on top of group 1 here, the 103, would get you to the 105. So just bear that in mind, and in just looking at that on sort of a closer structure here. So we're coming up here for from wave 2 here, up for wave 1, back for wave 2 here. I'm not sure about this count in here, but we really need to look at this being the third wave up here, so up for 1 and back for 2, but I might revisit that. And the 3, the 4 here, sure, that could be the 5 up to this point here, so that could be in play there now that I look at that in terms of 1, 2, 3, 4, 5 and making a new high there. We'll just put that there for the time being. And then this would be wave 4 here, which would pull back to the wave 4 of 1 lesser degree there as well. but this could also come back here further as well in terms of, because it looks a little bit small, an A and a B and a C here, and then up for 5 here. So yeah, a little bit more. Like I said, it's going to be, you know, a topping sort of pattern through here, so you need to be mindful of that. The copper market, the base metals, that's a bit tricky to follow. Okay, so we've got that on a large picture. Okay, so this is it on the 4-hour chart here. As we've been following it, we're looking at so far the A, the B, and then 5 waves up for the C there, and the 1, the 2, the 3. I think we were down here 4 yesterday, and looking for the 5th wave up through there as such. And on the intraday level there, we're looking at, yes, the 1, the 2, the 3, the 4, and the 5. The 5 may not get up this high here. Expect a rollover at this point because the extension's in wave 3. That means that wave 1 and 5 will be roughly the same in distance, in time, all those sorts of things. There'll be some sort of relationship there within the, you know, the within 40% of each other. The gold market is unfolding pretty much as planned. It's been a bit slow, but getting there. We were counting our little 5 waves up through here for the A wave. Then we're looking for an A, B, and C for the B wave here. So the buying opportunity would come in around the 12.30 here. Look, it may come lower, it may not come as low, but what we're looking for when it does occur, we're looking for, of course, a little 5 wave structure through here as such, and would be looking for it to be roughly the same size and sort of time as wave A here. Wave A is normally the sharpest, so wave C might be a bit more sideways here and may only come down to the 1240 or something. So you know, if it does come below the 1250 here, down here somewhere, and then get support back on the 1250, then you take that because it's tested lower, and that's what you're looking for with, you know, it's the retest is important. So because it's telling you that you know, that there is demand there are buyers there, and you need to put your stop under those buyers. So yeah, look for a more you know, more sort of shallow situation happening through here. It's possible, so keep an eye out for it. Now the move up from B wave here up through here should also have a relationship with this distance here as well. So we should be able to look at this distance here. So obviously we're looking to the 1300, and that's, yeah, we'll see how we go there, but it will be the 1300 or the within the group 1 area through here. The silver market was a little bit more chirpy, as we pointed out yesterday, and we were looking at, just coming back over here a little bit, you know, we'd spotted a nice little sort of structure up through here, and then this is quite a nice corrective. I know it looks a bit complicated, but for me, I recognise it. So as an A and a B and a C, so it was quite sort of nice. So that's why we're looking that once support was found on the 1950, the midpoint there, then to move higher, but instead of getting out at the 1972 like we normally would, but would be looking for support again to buy more here, and then obviously taking some out at the 2000 there, because we'd have to look at this as wave 1, wave 2, wave 3 here. It may not be finished. Wave 3 may be going up there because it looks like 1, 2, 3, A, B, C here for the 4th and the 5th here. So there'll be a 3rd wave to here, 4th wave back, and a 5th wave higher through there. So yeah, anyway, that's sort of all on track there. Let's have a look at FX. Okay, I'm going to start with the euro because it's had the largest change to the structure. Now, we had this pattern before. It's an expanded flat correction, and an expanded flat correction. It's a bit of a tricky one because the A wave to here, then the B wave here taking the low out through here, and then the C wave up here that normally trapping the bulls and taking the high out at this point here. Doesn't go much above there. The standard textbook thing is, I think it was 23.6 or something, but look, enough to lure the bulls in at this point here. It's called a bear bull trap. So we need to allow this to play out. So yeah, look, basically at this stage, we would look for, where are we here? We look for this A wave to here, the B wave in 3 waves to here, and then the C wave in 5 waves, just taking that high out through there. And then we need to see a confirmation of a 5-wave structure to the downside here. Once we got that, then we can look at the 3-wave corrective pattern through here and then look to short it from that point there. So that's what we're looking at. So we need for this to play out through here. If we're wrong through here, then we'd be looking at the 12972 here as an overlapping wave structure to play out here, because this 5-wave structure that we're looking for up here, to short that, it'd have to come back in over the top of wave 1 here. So this whole group 2 area here, if that became the resistance, then we can short from that point there if we've got it wrong. So because we could still be looking at down for 1 here, back for 2 here, down for 1 here, back for 2, the 61.8 retracement levels, just above the 130 there, probably level those highs there. So it can be 3 waves up here. So having it retested resistance at 130 is not quite enough to short it. You get away with it if you want, but that 129.72 is what we're sort of looking at that point there. The reason for this to push up through here as well is the US dollar as well. As you know, I've been searching for a top up here. It's just been a bit long coming, and I had to go with the 83.30 as support up here to move up higher, because we don't want to miss anything, of course, but at the same time we need to be sort of mindful of what's happening. So look, it's still highly likely that we can still get a move lower through here. This distance above 83 is the distance below here. It comes in at the sort of 50-60 odd % relationship here, 50 here. So that's what we're sort of looking at. So we are looking for a move down into the below the 83 here. Will we get this here? I don't know, this ABC here, or will it all be tied up in this first move here, and then we would look at getting a move straight up from that point there, and that's what we're expecting, the mirror opposite that on the euro. So look, that's what we're looking at, and we need that to play out. But as I mentioned on the euro here, tracking this 5-wave structure up here is going to be our aim. Now, we've got the ECB conference tonight, the next session, while rather the ECB rates will be coming out as well. So, it's a bit unfortunate, but, we are tracking 5 waves, but the rates could give us a spike as well from there. I mean, the market is pushing up, so it could be positive and push right up, or it could be pushing up during the Asian session and buy the rumor, sell the fact type of situation. So just trade light, be flexible, be mindful, and trade what you see. The Australian dollar is heading towards its support level around the 90 area there, and we're tracking we're looking for the bottom of the 3rd wave here, okay? So that's all coming into play. And in fact, that may be in there right now at that low there, because this move from wave 4 down through here we need to look at this as a ending diagonal triangle, which would be down for wave 1 here, back for wave 2 here, down for wave 3 here, a high wave 4 here, that's where we get our diagonal triangle from, and then 5 waves down here. And if you remember yesterday, we were tracking those 5 waves down through there. So when we have a closer look at those 5 waves coming down from here, we can kind of see that, from this high point here, we were looking at, I won't go into all of this, you can sort of pause it and have a look, but basically we were looking for wave 1 down to here, and I think we were here yesterday, and we were looking for a retest of 92, back up for wave 2, so that came in quite nicely, and then wave 3 to the downside, which is the 1, the 2, the 3, the 4 and the 5 for wave 3. That fits quite nicely. And then we've got the complicated sort of wave 4 happening through here, and then we're looking for wave 5 to come down. Now, the wave 5 to come down through here, yes, it could be there already. Let me just check on something here. That's still this wave 3 is I thought it just visually it looked a bit smaller than wave 1 here, but it's not the case. It is larger. That's sort of how it's supposed to be, because if it was smaller, then it was more likely that we could call a very short wave 5 into here, but that's not the case. So what we could have here is we could have this move down through here is just wave 1, wave 2 coming back, wave 3 here, wave 4 and wave 5 to here as such. Okay, so I think one of the ways of working with this is obviously working with the group 2 here. So a move above here, but I mean, if it moved above here, above the wave 4 here, then you know that it's on its way to the upside, and you'd be looking for long trades above the 91 here. If it moves up through here, I wonder if we just got a smaller chart here for a moment. Okay, you can see that we've got 5 waves here, so and it's above the 61.8% here, and it is looking quite chirpy to the upside through here. But if it moves back down through here and finds the 72 as resistance, then the 65 here, then you can add at those 2 points there. Let me see here. Yeah, look, I just imagine if the 65 becomes the retested resistance, trade to the 50, get out. If the 50 becomes the resistance, it will move through it, of course. The normal thing. If the 65 becomes the resistance here, then it will move down to the 50. It's always probably good to get out at the 50. If you're really trading tight and trading a lot, then the 53 is normally when I'd get out. I wouldn't wait for the 50 because I know that the 3, 2 and 1 the orders start to build up. So I just trade to the 3. Normally you get the bounce back to the 60. It could go back to the 65, but the 60 is sort of normal, and then you get a sort of series of lower highs here. When you see those lower highs here, then you know you can start building in a few trades from that point. And then you'll get your move down through here, and then you wait for your retest here. Once your retest is in place, then you can start selling from that point there as well. That you'll get a bounce off the 4th there. But it's not normally a problem if it's testing it at least a second time here. So then it'll move down to here. So you start moving out at 33 there, because when it does bounce off the 3 and the 5 here, it bounces sharply. So that's why you need to take your money at the 3 there and the 33 here, so to speak. So if that's the case there, otherwise, if this continues to build up through here on this side here and finds really, really good support here, and you can see that support there, and you can take that sort of trade, that simple 1, 2, 3 ABC. Many people have got it in many different directions. It came from the Dow theory, and but that's the one that you're looking for, and that would get you higher through that point. So yeah. Alrighty, well that's it. So yes, the US holidays. So the US holidays can either create our markets to be really subdued, or they can really just find their own feet and really take off in a particular direction. So be mindful of both of those scenarios. And yeah. So with the robo trading that we've got there, as you know, we've got long trades in, we've got short trades in, and we're trying to keep a bit of a balanced book there and try and edge forward and make a few dollars on that. But once that direction becomes clear in the way that the 4800 perhaps on the XJO is the support, then we know that we're going to have a quick run to the 4900 at that point. If that's not the case, then we need to have some other short trades in to move lower as well. But as always, We look for the weakest possible markets to short, and we look for the strongest possible markets to go long on, because even if the indices take a particular direction, if we've got that policy of taking those strong trades to the upside, good setups to the upside, then then it can still pan out quite nicely. Actually, because individual markets have their own individual tracks as well. Alrighty, thanks for listening.